Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Garrett Cook, and we have Lydia Idem Finkley on the line. She's a forex trader and author of Faith Might at FX.com. Lydia, how you doing this morning?
I'm great. How are you guys doing?
We're doing good. We're doing good. We know that you follow the foreign currencies first, but we also know you keep an eye on the indexes. Lydia, give us a take on this market activity over the last couple of weeks and your thoughts moving forward.
I think it's been exactly what we've needed. I think as investors and traders, we kind of needed a correction. A lot of sideways movement. I follow the S&P mostly. So when it comes to U.S. equities, it's been sideways virtually all year. So I think this drop that we've seen a couple weeks ago, and then we have some more sideways movement, I think is what we've been waiting for. I don't know that it's finished. I think we'll get another stab at the lows, below 1,800, and then we'll see if it breaks that Black Monday low or if it holds.
So Lydia, I was taking a look at the British pound trading this morning. What do you think was going on overnight? The currency moved between what would be probably about 11 o'clock our time before we rolled over into the Friday session through maybe about 4:30 this morning. It looked like there was like some very conditional selling coming in. Do you think anybody's taking positions out here? What's your take on the action that we saw overnight in the pound?
I think we're just seeing some profit taking ahead of the Fed. So it's been interesting. We've kind of heard from the whole world, and we'll hear from Japan next week ahead of the Fed. So we've heard from Australia, New Zealand, Europe, Canada. Bank of England was yesterday. We'll hear from Bank of Japan. So I just think we're seeing profit taking, and it's interesting to me and I said earlier that it's been a relatively quiet week, given that we had an interest rate announcement out of the UK. We just haven't seen, relatively speaking, we haven't seen a lot of movement in the Great British Pound across the board. I just think that the market is waiting on the Fed. It's September. It's kind of like the kind of action we saw in June. It was June, and while no one thought they were going to raise, it was the first date that we kind of heard out of the Federal Reserve since last year. And so now it's September, and I think you're seeing a lot of positioning ahead of next week.
So let me try to paint you into a binomial situation then, or only two options here. Do you feel that going into the summer, typically it seems like central bank activity and some of the FX volatility kind of chills out, a little bit. Do you think people were positioned, the big money was positioned in FX and currencies across the board going into summer? Or is this more people were waiting, stories changed, now as summer's ending and we're getting more central bank conviction and confirmation coming through, that eventually we're going to start seeing big money moving? So is the big money already in place, or is it waiting for more information and then going to be moving? What do you see as far as volatility coming forward and make of the action that we've seen this summer?
I think, given the pound, I think big money would be positioned, and I think the most uncertainty comes around the U.S. dollar. So we're seeing a lot of strength in the economy, but we're not seeing, and typically that would translate into dollar strength, or whatever currency you're following. Mm-hmm. We've seen some dollar strength, but I don't think we've seen as much as most would have expected. I think we would have expected to see like the pound dollar trading around $1.50 as opposed to $1.54. Just given the economics data that we've seen, but that's recent. We saw a weakening economy. We at least saw softer numbers during the summertime, and so people were pushing. That's when the market was okay. The Fed futures okay. There's not going to be a hike in September. Then we got the 3.7% GDP number. We still haven't seen weakness in the labor market, and so now there's a chance they might still hike in September, most likely. Maybe now October has been a month has been coming up now. December's still around. So to answer your question, I think in most of the pairs that I follow with the pound, I think the big money is positioned. I still think there's a lot of uncertainty around the dollar. Okay. So we're kind of getting this, we're getting swings in the pound dollar as opposed to trending.
Do you use the pound and any of the pairs that it trades with as a leading indicator for any sort of equity indices around the world? I know here in the U.S. there's a lot of traders that like to look at the USD JPY pair as an indicator for what may happen with like S&P 500 futures. Do you see anything like that, or have any other unique ones?
is definitely one that you can also look at. And sometimes it's funny. Sometimes you don't know if the pound yen is the dog wagging the tail or the tail being wagged by the equity dog. So but yeah, the counterpart with the pound yen, it's definitely nicely correlated to equity market.
What do you think the Bank of England's comments this morning about potential sterling strength having less of an impact on inflation than they expected, and that if this continues, they would actually be tightening policy sooner than later? Are you seeing anything, perhaps in positioning in the pounds or any other currencies that would lead you to believe that this is actually possible, that they're going to potentially tighten monetary policy sooner than expected?
We're definitely seeing that against the currencies whose central banks are easing. So particularly the pound Kiwi, where the Reserve Bank of New Zealand is definitely a dovish central bank. They cut interest rates earlier this week, and they haven't ruled out more easing out of there. So when we're looking at the central banks that are obviously dovish, we're seeing that the pound, because versus the Bank of England that is tentatively hawkish. And it's interesting this week that they didn't downplay their hawkish tone in light of what's happened. And what I've been looking at is what is everybody saying about China? China has emerged this year as almost a leader in monetary policy. When we were looking at the Fed, probably up until the past year and definitely this summer, now everyone kind of waits for the People's Bank of China, which is a really interesting change in the market. And, the world has changed a lot in the last 2 months. And so it's really interesting to hear how central banks have reacted. Most of them have shown concern for the volatility coming out of the Chinese equities, except for the Bank of England. And I think that moving forward, after we get this Fed announcement, we'll start to see the pound actually strengthen further.
We're on the line with Lydia Idem Finkley. She's a Forex trader and author of FaithMightFX.com. Coming out of the chat room, Sheldon McIntyre, Her Capital, would like to know if Lydia thinks I should double up on my yen long.
Long yen. Ugh. I think you have to pay attention. Double up. I think you have to pay attention to equities. I know it's sideways now. I think we would see a retest of the lows, in which case I would say, and especially with the pullback that we've seen in the pound yen, if we see pound yen staying below 187.50, which most of us feel like it will, and we see equities dip again, that would be a very good trade.
Okay, all right. We got to talk about China. I mean, that's kind of kicking things off here. And the devaluation, the chaos in the markets, they're not buying our exports, and they're not consuming. Are we all tied to China here? And with the yuan devaluation, do you see further devaluations?
I don't know that we see further devaluation, but I wouldn't rule it out. They are intervening in the market. They're trying to prop up their stock market, and I think for the first time we're seeing that they're burning through reserves, and they have the reserves to do it, and so I don't know that they would go to devaluation soon. I think they will continue just to prop up their markets the way they have been. I think if we see a devaluation, there has to be an external shock, whether it's the Fed, whether it's a further drop in commodity prices, that would prompt them to do that. But I think what we'll see more is more jawboning from them, and more, especially as they figure out how to quell markets. This is a new role for China, so I think we'll see just more propping up and more, and we'll hear more reports of how much more money they're going through as far as their reserves.
Okay, we're on the line with Lydia Finkley, Forex trader and author of FaithMightFX.com. Lydia, I mean, you were talking about the Fed here. I mean, the economic, it's data dependent. I mean, is the data strong enough here to justify an increase in interest rates?
I absolutely think it is strong enough. The problem is that we don't operate in a vacuum anymore. Through globalized economies and interconnected financial systems, I don't know that. I think without those things, we'd see a hike. We probably would have seen a hike a little bit sooner, but we would see a hike. But because of what's going on beyond our borders, I think it does make the Fed have to at least pause and think about it, and that's what they're doing. What also is interesting is that we haven't heard a schedule, like if we're going to see gradual rate increases. This is the kind of language you're hearing from the Bank of England, which puts them on a hawkish edge. They're prepping the market to be prepared for a series of hikes, which I don't think the Federal Reserve is entertaining right now. I think that if we do see a rate hike, it might be a one-and-done situation, in which case the dollar actually would weaken in such a scenario.
So what kind of reaction are you looking at in the market? Do you think that the market's already factored this in and that, as everyone thinks the market may be going down off this news, that it just might get just this wicked relief rally, that it's just finally over, at least the first hike?
I think for the first hike, we're going to see a spike in dollar strength. I do think we'll get a reaction. It's the follow-through later that will be interesting. Just the Fed stays data dependent. I think the market, particularly with the dollar, has behaved the same way. So I do think we'll get a spike in dollar strength. I'm concerned with whether it trends higher or not. If we don't get rhetoric beyond the data, but if we don't, because the data's strong and it doesn't show like it doesn't seem like it will weaken. If we don't get rhetoric that there will be another rate hike in the cards for 2016, the dollar will inevitably weaken, just because there's no expectation for further hiking.
Lydia, we know you're an expert on the foreign currency markets. In fact, Herd Capital, Sheldon McIntyre says that you are one of his top recs for currency market analysis trades. So he thanks you for that. So what do you do with like a stock like Procter and Gamble? Okay, I mean, this thing has been getting hit on dollar woes for quite some time here. Now, if the dollar continues to strengthen, it makes their goods less affordable overseas here. So, do you just kind of be hands off on Procter and Gamble?
I don't know. I think that I'm a person who trades the charts in and of themselves, and I look at the fundamentals for trends. So, if the dollar comes down, and a fundamental trend like this would take several months, if not a year, to see how the dollar behaves before you probably take a long-term position in some of these consumer names. The dollar strength we've seen it hamper earnings, but we really haven't seen a weak earnings season as you would expect, given the strength of the dollar for so many years. Right, so I don't know that you would play it. I think you just play, Procter and Gamble off the support levels and Fibonacci levels as you would. Probably you would probably leave it alone now, given this dip. But longer term, we might see dollar weakness.
All right, just talking about dipping into the market here. We've had the correction. Has there been any issues that you had been itching to buy and got back to levels where you feel comfortable? Any issues you've been adding?
To
the stocks, as far as your stock portfolio.
Oh no, I'm still waiting. Like I said, I still think that we see another dip into the lows, and whether or not that those lows hold. But I have been accumulating, just strong companies. I like companies like Facebook. I like J.P. Morgan.
Mm-hmm.
I think companies that were strong going into the decline will remain, and they can remain strong through this period, I think those are the stock names that you want to get into.
Yeah, continued strength. We haven't talked to you since the flash crash there, and I know you're active in the foreign currency markets. Did you have the kind of vacuum moves the foreign currency markets that you had in the stocks? Was a little bit more orderly. How did you approach that day, and how did you fare?
I did really well with the yen. The yen had already been declining going into that Monday, and we had seen, the pound yen had been declining, so the yen had been strengthening going into that move, and so when we got the drop that Monday, I did very well. My readers for the Quid report, we did very well. We were already positioned for yen strength on that day. Other than that, beyond that, you saw tremendous spikes higher in the pound versus the commodity dollars, as you know, the commodities crashed alongside equities that day. So we actually fared very well. These were actually trending moves, particularly against commodity dollars. They had already been trending higher, and so we realized a lot of profit targets that day. I think the only thing that was kind of surprising was euro strength. Mm-hmm. And I think the euro strength that we've seen with these equity decline has actually been the most surprising move in this decline.
Did you hear about the Goldman call for $20 oil this morning?
I did hear about that call.
What do you think about that?
I think it's a Goldman Sachs call.
All right. Okay. All right. So I think nothing more needs to be said about that. What about gold here? Had to run up over 1150, got to 1160 area. Now we're back down to 1100. Still basically hanging out near the lows of the move here. Is there anything that spark a rally in gold? Or are you looking for triple digits?
I think I don't have much of an opinion on gold. Okay. I don't trade gold, and I really don't follow it. It's a commodity that is it has too much emotional sentiment around it. So it's not an instrument that I follow. And when it comes to commodities, I like to look at oil or copper. They have more correlation with certain commodities than gold does.
We've been on the line with Lydia Idem Finkley. She's a Forex trader and author of Faith, MightFX.com. Lydia, we're certainly going to have to get you back on next month after the Fed, if the Fed does the rate hike, you get your input on the markets. We appreciate you coming on. We'll talk to you again soon.
Thank you. Take care, guys.